Hi, welcome to Search for Yields, the weekly newsletter from INR Bonds. I'm Arjun Patsarthi. And in this week's edition of Search for Yields, we are going to talk about whether bond yields will fall in 2023, calendar year 2023. We are just turned into the calendar year 2023. And if you look at the performance of bond in 2022, it was very, very poor, which is both globally. Bond yields have risen very, very high in the US, in the Eurozone, and other markets, and including in India as well. GSEC yields have risen. So investors who have invested at the beginning of 2023 have lost money by investing in bonds in GSECs largely, especially long maturity bonds and even short maturity bonds. Across the curve, they've lost money, except maybe in the higher yielding bonds. In India, at least, the bond yields have stayed largely stable at a higher yield. However, with the government bond yields rising very sharply, it's the basic benchmark for other bonds as well. And the feeling is, even in the global markets, is that with inflation still high and with central banks raising rates, there could be uh, there could be further rise in bond yields. But having said that, given that it's already risen very high, sharply higher, and it could stabilize at just about around slightly higher levels, and maybe with if the economy is actually slowing down because of the rate hikes and high inflation, then yields can start to trend down. Now, but will this happen? And there is large schools of thoughts. If you have been observing the financial news or all other research reports from various sources and other commentators, that they are expecting some kind of pullback in bond yields, and that could provide a good fillip to the bond markets globally. But will that happen? Now let's see the factors. Just showing you two charts which are going to be the main contributors, which is the inflation globally and which is a bond yields chart. Now the question is, inflation has risen very high. Have bond yields risen high enough? And clearly, this is a question that needs to be answered. Now, if you look at the inflation in the US, which is over 7% and like 8%. In the Eurozone, it just came in at 9%. And in India, it's around 5 it came in around 6%, but it can trend higher. The its targets are closer to 6.5%, 7%, at least for this fiscal, and maybe slightly lower next fiscal. But and with the in the global markets in both US and Eurozone, the bond yields are well below inflation. And in India, the 10-year G-Sec yields at around 7.4% is on par or slightly higher than inflation, which is positive. The question is that again, will can this come down? How much? And if it comes down, how much will it come down? It doesn't. If you look at the inflation, even if RBI is targeting 4% inflation target for the next couple of years, and this year they are saying that inflation is not going to go, definitely not going to go to that level, then the 10-year yields is looking very, very difficult for it to come down. Maybe it can stabilize at such levels, but definitely not come down because does look that even if inflation is coming down, then the markets will stay at a higher level than the bond yields will stay at higher level than inflation, just because there's been so much of uncertainty. And in the global markets, definitely yields, it's very difficult for yields to trend down unless inflation falls down very sharply to 2% levels. But even if it does so, it's unlikely that central banks will start to cut rates or in a hurry. And they will not look to factor in lower inflation for a longer period of time. The current worry is structural inflation, high inflation. Now, if it's structural high inflation, then definitely it's a big sign of worry for investors. And with bond yields showing huge losses, bond prices showing huge losses for investors, investors too will be extremely wary of getting into government bonds globally, given such losses and the fact that they have not earned anything in the last many years, especially in the last 1 year and 2 years, where inflation has been higher and the yields have been extremely low. And so they have lost a lot of real returns in yields. So this is going to be prey on investors' minds, and it's going to be very difficult for investors to reconcile to the fact that GSEC bond yields can come down. And even in India, the 10-year bond yields looks priced, given even with an RBI looking at lower inflation target, because they would require a reasonable amount of spread between inflation and the GSEC yields to give real returns to investors. And hence, even 2023, it does look to be a year where GSEC yields um, can stabilize maybe at higher levels, but definitely not look to come down from current levels. So investors would have to wait, and the best way to more invest in the bonds is obviously to keep getting into those short-term bonds and roll over as and when roll over the maturities of the bonds, taking a call on whether can invest in longer term or shorter term bonds even at that point of time. Highly unlikely that leads are likely to trend down, so there is no worry about reinvestment risk. So investors should still position for a lot of uncertainty in yields, and it is definitely unlikely that GSEC yields will come down from current levels. Thank you very much for listening in, and do not forget to log in to our partner portal if you are a financial advisor who are selecting the best bonds in such kind of interest rate environment and enabling your clients to earn the best returns available in a market that is uncertain. With the bonds that are provided by INR bonds, giving you the information, giving you all necessary tools for you to select the best bonds for your clients. And do not forget to download our app, Quick Invest by INR Bonds, for the best curated list of bonds on offer with our own proprietary risk rating model to give you the best risk-adjusted returns. The financial advisors and investors can download the app, check the bonds, and invest in bonds. The easiest of investment purchase. Download the app now.
As a financial advisor, my biggest responsibility is to help my clients make the right investment choices. Now, with INR bonds, buying and investing in bonds for my clients is quick and easy. With my guidance on bonds, my clients are happy and I'm getting new business every day. Register as a financial advisor on inrbonds.com to help your clients invest and save better through bonds.